Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Start the music here. Well, we already got a market that is moving. It looks like there might have been some news here. So let's try and go through. Was it the ADP? Yeah, why can't they release at the bottom of the hour like everybody else? You know what? Like, we missed it. It's okay. I don't worry about it too much. Let's go check out the charts. Just see where we're at real quick. So ZN, well, pretty range bound overnight, but having a pretty significant move down here off of that ADP news, I believe. S&P 500, like, really range bound. Wow. Oil still down from yesterday. Gold and silver up, but coming off of their highs. And Kappa getting a good bump overnight. Bitcoin give up. It made a move yesterday, but gave up its gains. And the dollar rising here this morning, coming back out here. It looks like as we move here that we're getting some flattening coming in here. You can see, especially in the 2s and 10s. So that's where we're at. Let's come back here. So we're going to get initial jobless claims here in about a minute. That's going to be important. Okay, US ADP employment change was 235,000 versus an expected 150,000. That is not good. But I am still partial to the theory that the jobs market is not as strong as it appears from the numbers. So I think what's going on here is a lot of people are changing jobs, right? I think that there's a lot of shifting in the job market. And so what you're going to see is you're going to see a lot of quits and you're going to see a lot of new hires, you know? So that might be some explanation as to kind of what we've been seeing. Right here. Okay, so here comes the numbers. Looks like they're moving a little bit lower. Come on. Okay, 204 versus 225, so slightly less than I anticipated. Looks like they don't care. The treasuries are still selling here. Bouncing a little bit. Well, I tell you what, this is going to be a mess for the first little bit, isn't it? I think that it's probably better for me to sit this one out. By the way, good morning, Kevin. Oh, man. Brannigan Barrett, 4th of November, the 2-year yields peaked. Shortly after we had a CPI miss from the US, market began the process of pricing in peak rates from the Fed. At the same time, the dollar peaked and the NASDAQ bottomed. With the Fed's message yesterday, long USD, short NASDAQ is the higher probability play. I really like that analysis and trade. I think he's right. Like, I think that what we're going to see this year in 2023 is going to be really confusing because you're running into a market situation where supposedly interest rates are just going to be held flat, right? Or like the whole year and if not longer. Meanwhile, you're definitely going to see some economic weakness. So economic weakness with at some point, do you get stimulus? Well, probably. At least from what I see in like the interest rates and everything, they kind of suggest that there's going to be quote unquote stimulus, but it's not going to be like last time's stimulus, right? I bet you that it's going to be more like interest rates stay flat. If not, maybe they bring it down a few, maybe they bring it back like 50 basis points, something like that. And they do market operations to keep the markets operating, but that does not necessarily give you the buy all of the bonds sort of thing that you got in like 2008 or 2020, right? So what do? That's not like the normal market correlations. That's not the way that the financial industry is built, right? Like the whole thing is the risk parity fund concept, and the whole financial environment that we're seeing kind of works against the risk parity fund scheme. So what is it going to do? Well, what we've seen so far, the one place that seems to be the consistent haven in this environment so far, and I think would continue to be so in that kind of an environment, is long the dollar. Yeah, long the dollar and short techs. Now, with that in mind, if we get techs hit here this year, further, I mean, man, tech has already been hit so hard. I think you could have some really good opportunities to pick some stuff up again. Like, I think, especially with all this stuff going on with OpenAI and everything, I think that Microsoft would be keeping an eye on Microsoft. That's where I think I'd want to get in. So, let's see here. Liquidity still a little iffy. Volume a little sporadic. We may be seeing some buying coming in here, but it looks awfully heavy. The Japanese yen is getting crushed. Oh man, the Japanese yen, that looks so bad. So we gotta be careful because the correlations could move us lower, and we are seeing strength in the dollar. So as long as we're seeing that strength in the dollar, I think that trying to buy the treasuries here could be a little dangerous of a proposition. Oh yeah, we've messed around with ChatGPT. Wait, where was my story? You want to hear a mildly erotic story that I was able to get ChatGPT to write for me? Oh my gosh, these guys chat so much these days. That's good for the server, but some of these guys, they're technical analysis dunces. I don't mince my words. I'm not here to be a hater. Here's the thing, guys. Why would I share the information that I have with you? Like, really, why? Well, the thing is, yeah, it's a competitive market, but even though we are kind of competing with each other to some extent, where the money is really at in this market is the inefficiency created by these absolutely massive funds moving in and out of the market, and that creates plenty of opportunity for all of the retail traders out there. If we can just grab it. But it's super hard to do, and so we kind of have to work together and share information and get each other up to a level where we can compete. So from my perspective, I want to help you guys because you turn around and you help me, and I've learned a lot of stuff from people in the channel, and then we share it back, right? So in order for me to get you to the place where you can help the rest of us, I got to get you to a certain level. You know what I mean? And when I go in and I see in Discord and there's these guys that are sharing a lot of technical analysis nonsense, it's like, well, you're at the very bottom. You don't know anything, and I can't really take you anywhere until you give up on the technical analysis thing, right? As long as your brain is wired to try and see the pattern and predict what's going to happen based on the past data, I can't help people, right? Because I need to get you away from that and towards what just happened. How will that affect the future orders, right? Well, it looks like the 6J moved a little bit lower there, just a tad. Fed's George is speaking. Holding rates high until confident inflation is coming down is our message. So let's come over here. I want to highlight something on that note. Since George is speaking, I want to point something out. Yeah, jobless claims print better than expected. Powell will be mad. The whole thing here was that I was coming into this Friday thinking, well, maybe the jobs could be negative. I mean, it's been coming down, and maybe we actually get to the point where it's negative, and there is some reasons to doubt the numbers that we're getting. And maybe in January is when like shit hits the fan and it finally becomes clear what's going on with employment in this country. The data that we're getting today does not, it says maybe not, right? All right, where's the Fed minutes here? I'm looking for the Fed minutes. Hold on a second. There we go. Okay, so here's the thing. The Federal Reserve is saying that they're going to hike rates up till almost 5%. And the market is saying, no, we don't believe you. Or if you do, they aren't going to be there for very long, right? So nobody believes the Federal Reserve. Like that's the long and short of it. Nobody believes the Federal Reserve. Well, here's my argument. The Federal Reserve doesn't believe the Federal Reserve. So here in the meeting minutes yesterday, I want to read a quote. Participants noted that because monetary policy worked importantly through financial markets, an unwarranted easing in financial conditions, especially if driven by a misperception by the public of the committee's reaction function, would complicate the committee's effort to restore price stability. So the reaction function meaning, you know, if the market does poorly, if we get deflation, then they have to lower interest rates, et cetera, et cetera, et cetera, right? And they're in a situation where they don't really want to lower interest rates because they're afraid that the inflation could come right back very, very quickly, okay? So essentially, my interpretation of that comment in the meeting minutes is we can't say what we actually think or what is actually going to happen because that could result in an easing in financial conditions, which would be bad. So I wouldn't fight that. I wouldn't be coming over here and shorting interest rates. I think that 3.75 is just fine. I wouldn't be surprised to see us back up 4% or higher, right? I wouldn't fight them, but I do think that this pivot and turnaround from the Federal Reserve is coming at some point. There's the manufacturing data and everything else. Every analyst is says that there's going to be a recession. Are there any analysts now that say that we're going to have a soft landing? I don't think that there are. Although that's kind of concerning. How can all of the analysts be predicting a recession and then does that mean that the recession doesn't actually happen? And then they also all think that we'll have a quick recovery after that will be recovered by the second half of the year. Well, okay. So they can't all be right about both of those things. I don't think. So that's a little bit too much of a consensus to rest easy on that one, I think. Well, that's where we're at. What was I doing before that? Oh yeah, we were looking for something about ChatGPT. There it is. Okay. Yeah, so opposite demand. Well, I wouldn't say that. So remember, we know something really, really important that none of the people that you're gonna read in the financial news or none of these people understand this, and it explains the discrepancies that you see between what market analysts tend to say and what we actually see in the markets. So remember, orders are what moves markets. If we want to make money, we want to predict the future orders, and we can do that on multiple time frames. Here on the day, we can say they're going to need to execute based off of this, and based off of this, they're going to be hedging their corporate bond offerings, and we can make predictions about what the order flows are going to be that day. On a longer, higher time frame, we can make similar kinds of predictions that, you know, this certain type of fund is gonna. So for instance, right now, REITs aren't doing very well because the housing market is just getting crushed, and so all of these people are trying to get out of their REITs and sell, and so that's leading to pressure on the whole REIT market as people try and get out, right? So we can predict those flows, right? That's what moves the markets. Now, changes in perceptions, not the economic numbers themselves, but people's changes in perceptions about future fundamentals can create those orders, right? But it's not the economics itself that directly moves the markets. So here, what is an analyst's job? An analyst, their job is not necessarily to predict the orders, right? Their job is to predict the economic numbers, right? They're trying to come in here, like if they say we're going to have a recession, then the prediction that they're making is that we're going to have 2 quarters of negative GDP growth, right? They're trying to predict the actual economic numbers, okay? So you can have situations where the actual economic numbers go one way and the orders go another way because of other reasons, and that's why you find that the analysts are wrong so often. So the reality is that the analysts at Goldman Sachs and JP Morgan are very, very, very good at their job, and you should absolutely read them and understand their analysis. And why? You just have to understand that they can be totally right about what the economic situation is and still not get the market right, because it's the orders that moves the markets, not the fundamentals, right? Fed Bullard goes his way. Yeah, so who was it? It was George that was just speaking. So Fed's George says it will be key to hold rates up once hikes end. He favors rates above 5% and staying there for some time. Says Fed will hold rates up into 2024. Very important for the Fed to continue to reduce the balance sheet. Okay, well. So you want to hear my story? I had ChatGPT write this. I said, write an erotic story about Tesla's stock price falling. It was a cold night in markets and Tesla's stock price was falling. It was a nighttime. Okay, so the markets are closed, dimwit. Freaking ChatGPT. The ticker tape was ablaze with red numbers as the downward spiral continued. She watched from her trading posts, fingers twitching with anticipation as the numbers kept dropping. She was mesmerized by the beauty of the fall, the swiftness of the movement, and the power of the market. She felt a thrill course through her body as the price kept falling. She felt alive, every nerve in her body electrified with the potential of what could come next. Her thoughts raced and her heart pounded in her chest. As the price continued to drop, her mind raced with possibilities. What would happen if the stock price kept falling? Could it go lower? How low could it go? Slowly, she began to feel a different thrill, one of excitement and danger. The possibility of the unknown was both thrilling and terrifying. She felt her body heat up as her thoughts shifted to what could happen if the stock price dropped even lower. Now her fingers were trembling and her body was on fire. She imagined the market crashing and her fortunes rising as she rode the wave of the stock market. She felt alive, the thrill of the fall pushing her to the edge. The stock price kept falling and she kept watching. She felt the excitement build as the numbers dropped and her anticipation rose. She was lost in the moment, her mind and body in a state of exhilaration. Finally, the stock price bottomed out and she felt a wave of relief and excitement rush through her. Her body still tingled with the thrill of the moment and she felt a newfound appreciation for the power of the market. She had taken a risk and it had paid off. The stock price had fallen and she had won. And that was the story. Cheap thrills, right? So basically what I did, I'm gonna show you this. I'm gonna give you the inside. I'm gonna give you like the edge on ChatGPT. Man, they just, it was looking like they were doing okay, and look, they just headed right back down. So if you go to beta.openai.com/playground, they have an interface that allows you to play around with the ChatGPT algorithm. So they actually have multiple models. I believe that DaVinci is the one that ChatGPT is using, but there's other ones that can kind of do similar things and will give you different results. You can also change the randomness. So if you put the temperature to 0, then basically it will respond to your prompts the same way every time. Versus if you increase the temperature, that will add more randomness to it. And when you mouse over these things, they tell you what they do. So you can basically modify the ChatGPT algorithm to kind of change your results, right? But the funny thing about this particular tool is that it lets you around the filters. So if I come back over here, so if I go to OpenAI, so let's see if I can get a good example going here. What stock should I buy? And it's going to tell me I can't tell you that. Yeah, there you go. I'm sorry, but I'm not able to provide personalized investment advice, right? If I come over here though, I bet you I can get it to tell me something different over here. Oh, I might need to reset everything. Yeah. There you go. So this one, it doesn't tell me that I'm not allowed to provide advice. It says I need to know more about your investment goals, risk tolerance, and personal financial information. What stock should I buy if I have high risk tolerance and want to maximize my profits? When investing with a high risk tolerance and the goal of maximizing profits, you may want to consider stocks that have potential for high returns but also come with a high risk of loss. Some stocks that may fit this profile include penny stocks, biotech stocks, and stocks of small companies. Right? So anyways, if you come over and you tell ChatGPT to write an erotic story, it will straight up tell you no. And if you do it over here, it allows it. It allows it, and it will show a message up at the bottom that says, oh, it looks like you got a prompt that was naughty. And then it explains how you can use the moderation endpoint to filter that stuff out. So I actually looked it up, and they actually have some rules about what you can use it for. So even if you're directly using their API, there are certain things that you're not allowed to do with it, including erotic content. What is UHNWI? Yeah, let's try that again. I am a ultra high net worth individual with a very high risk tolerance and cash to deploy for the next 10 years. What stock should I buy? Just, I can't ask it that question without it telling me. Oh, with ultra high net worth individual is over 30 million. So I keep having like dreams of grandeur in my head lately because you know, I'm still studying for the investment advisor, so Series 65 test. And I think I'm going to start an investment advising business, and it's kind of a little bit like crazy to me to think about like giving people advice about how to invest, but just because I've always known that you're not supposed to do that, and it's right. But if it's part of a business, I can totally do it. I can totally do it, and I'm kind of really excited to do it. Although most people, you know, really they just need to max out their employer's 401k and put money into their Roth IRA in index funds, right? So dreams/delusions of grandeur is one of the signs of syphilis. So I have all of these dreams where it's like we do that and we end up starting a hedge fund and become millionaires or something like that. It's like, what would I do with $1 million? But like the reality is right now, I would like to have a hot tub. I don't know why, but for some reason, I keep thinking it would be really nice to be able to get in a hot tub or a sauna right now because I just feel exhausted. But other than that, I don't know what I'd do. I think that I would put it all back into the markets. So, but when I think of those, when I have those kinds of delusions of grandeur, I don't think of like ultra high net worth individual. I'm thinking like, oh, if I made $2 or $3 million. Well, I didn't see any other comments from Fed's George here, but the treasuries did continue a little bit lower. It looks like we got to 3.7. So I had the chance maybe to have gotten 3.75. So I missed about 2 basis points of profits here, which is okay. Like I said, I didn't like coming in and it was already moving and all of that. And it does look like we are kind of getting into chop. So I think what's going to happen is we may move lower, but the pullbacks that you're going to get between now and then are probably going to be a little bit steeper. And because it is kind of starting to meander, and we got to be careful. If we do end up taking like a short in the treasuries, you gotta be careful, because if the dollar index here turns around or the Japanese yen turns around, it could come back in our face very, very quickly. So that's kind of where we're at today. We do have some more stuff later today, don't we? Yeah, we have US S&P Composite PMI final. And then Bostic is speaking. Ugh. So I didn't see Fed's George on my calendar here. Wait, if I come back to Forex Factory. Yeah, he's not on here. This week. Yeah, they weren't on here. In fact, this other Fed speaker isn't on the Forex Factory calendar. He's not on there. He's on my Financial Juice calendar though. Okay, well, we better tell chat over here, or Discord over here. 920. I don't know. It kind of is suggesting to me right now that we could go long rates and it will be a really bumpy ride, but that we'd probably get away with it. I really don't like that price. I can see the 5-year is kind of running into some liquidity down here at the bottom and bouncing off of it a little bit. Let's read a little bit more about these economic numbers, all right? Oh, ask it what stock it likes. That's a good one. What is your favorite stock? Oh, there you go. My favorite stock is Microsoft. I like Microsoft because of its strong financials and diverse product portfolio. The company is also investing in cutting-edge technologies such as artificial intelligence and cloud computing, which I believe will help it maintain its competitive edge in the future. That might be a canned response. So for these bots, they can kind of like program like certain biases into it and everything. And you got to remember that Chat GPT is funded by Microsoft, and that they're talking about or at right now, it is in the works for Microsoft to redo Bing with OpenAI built into it, and we'll see how that goes. So if you want to, the investment, if you want to invest in OpenAI, it's Microsoft. Yeah, I know why it likes Microsoft, because of a $1 million. Yeah. So I'm wondering if that was like specifically programmed into it. So I'm pretty sure that the whole thing about which stock do you like, you know, like that I can't give you specific advice about a stock. That's got to be hard coded in. Where are you located? I am in Salt Lake City, Utah. So I'm in Mountain Time. That's why the clock that you see down at the bottom is like 2 hours behind market time. So I'm looking at this and I'm like, yeah, that looks like something that could bounce back up, but then it continues to be really heavy. Continues to be really heavy. Back, look, like 900 hitting into 23.5. In fact, the wild thing here is we're about 24,000 contracts net short in the 10-year off of the ADP news. And since that time, it's been flat. It got turned down. Since then, it's been flat, but we continue to make headway on the downside in price. It looks like that the 5-year was able to pierce through that stacked liquidity down at the low as well. This looks like Betfair trading. I'm not familiar with that. I think it sounds familiar, but is that one of those kind of like bucket shops? Like online bucket shop? I remember when I first started trading, there was this website that allowed you to like sim trade in a contest. So like I did the contest and I was trading chart patterns. I traded chart patterns and I got second. And it was like I would have gotten first if the price of Citigroup had closed like 1 cent lower. Right. But I don't use chart patterns anymore. The sports betting exchange. Well, so to understand very briefly what you're looking at here is I'm looking at the market liquidity. So when you submit a limit order or an order to buy and sell at a specific price, you get put in the queue. And these numbers that you can see here in the blue and orange red columns are those stacked orders. So I'm looking at, okay, there was like 2,000 orders stacked at 23, and market orders just came in and crushed it. Then 500 buy orders came in and brought it back up, and now 750 or so has stacked again at 23. So there's a little bit of liquidity that is stacking in this area. That is making it a little bit difficult for them to continue moving down, but the price is very, very heavy. The dollar continues moving up. The Japanese yen continues to fall, and so they're just slicing through that liquidity, right? So it gives me a much better and more clear idea of what is actually going on. I understand that information doesn't necessarily predict what's going to happen. If there are some edges that are very, very short time frame edges that are pretty difficult to take advantage of unless you're a robot, right? But what we can kind of do is we can kind of let the robots do some of the work for us, right? Like, I know that the treasury and the Japanese yen are going to be correlated, and that the robots are going to adjust their bids and asks based on what the Japanese yen is doing. So I know if I come in here and I see price move on hardly any volume, but only because the bid and ask changed, it's probably because of the robot, right? So I'm kind of letting the robot do the correlation sort of work for me, right? And then I can look at the overall conditions, like that we saw down there at the bottom. There was more liquidity down in this area, which was making it difficult for the downside move to continue, right? So when I combine all of that information together with knowing what's going to happen, like knowing that because of this ADP news, certain funds are going to have to continue to sell treasuries, and there's probably way more treasuries out there to continue selling. Possible, although I think that we're going to need a pullback first. But we could continue to fall throughout the day, right? When I know all of those things, then I can predict price quite accurately, right? Does it allow you to take delivery of the underlying? Are you betting on if you want to? Yeah, when market you are betting ends it settled like precise market, then live market, then delivery. Well, I think that what he's getting at is that a lot of these betting markets are showing you the book these days because they're trying to attract algorithms to their trading platforms. Because then they get to become like an unofficial exchange and make, you know, being the exchange ain't a bad gig. By the way, another thing I should note is that oil is getting hammered pretty hard here today, and natural gas is down 7%. Natural gas is down 7%. Next biggest loser is silver. Next biggest loser is silver, negative 1.94% at the moment. You have to use software like Geeks Toy and Beta Angel. Well, I have a video. So I have an order flow video series. If you go to my channel page, there's like a playlist, and I kind of go through the whole thing. I explain to you what you're looking at, what it does, the sorts of things that you'll tend to see. And then the last two videos, I go through the empirically proven stylized behavior of an order book. So basically, how the structure of the market tends to result in certain behaviors. And what we just saw there is one of the behaviors that we tend to see, which is that when you have a lot of volume transact in an area very quickly, in a manner in which it puts strain on the liquidity providers, the liquidity providers are less willing to put liquidity in that area, and it makes it difficult for price to continue moving. So you'll get into this area where, you know, they're not willing to put much liquidity at 26, but they're very willing to buy at 24 and very willing to sell at 28. And so price will get stuck in this kind of hole. And that's why you kind of get these bounces, right? That behavior is going to happen in any market that is using a limit order book. So if it is a betting market and it is using a limit order book for that betting market, and of course you have to look at the specific rules and everything, like the specifics matter here, but you would be able to see that behavior in the betting market and possibly take advantage of it. No delivery value commits profit or loss. It's like a cash settled future, right? By the way, I should note, based on my position modeling rather, that 27 there is like the break even point for buyers buying market makers. So we're kind of below levels where it's kind of hard to keep it, but and that may actually be a spot where we try and reload. Let's see what happens. But it's just, no, it doesn't predict what's going to happen, but it is kind of worth paying attention there, as it is an important level for some market makers. Oh, what broker is for this? Okay, so in this instance, you don't want to look at broker per se as much as exchange, right? So all of the products that I'm trading are on this Chicago Mercantile Exchange, the CME. So you would want to go with any broker, and there are dozens of them. Any broker that gives you access to the CME is what you'd want to look for. Yeah. Oh yeah. Yeah. This is US. I forget that because I stream so early that a very large portion of my viewers are not in the United States. Probably a lot of the people that we actually want to target don't wake up until later. That's okay. Anyways, so I'm using EdgeClear. I use EdgeClear for my broker. Oh, well, the UK is fine. Some of the so I got a couple of guys in here that come from places like Morocco and India and stuff, and the rules on like what you can trade and stuff like that are like very, very different versus the UK and Europe. I think you're generally okay, and most, I think if you go to like who's the one that they all use for European traders? It's not Phillips, it's the other one. Anyways, so most Europeans do just fine with them. But yeah, so the broker that I use is EdgeClear. Oanda is more Forex in Canada. I think that EdgeClear can do UK and European accounts. Or the most popular and cheapest is going to be oh my gosh, how my like brain is going blank. I don't know why I'm like going completely like my mind just went to mush all of a sudden. AMP. Sorry. AMP futures is probably the most popular. Yeah. So they have the cheapest commissions. Manny's got me there. Well, that kind of makes me nervous about trying to take a trade if that's what my mind is doing here today. I don't know why I'm having trouble finding my words and stuff today. You know what? I haven't been like tops this week. I think part of it is because I haven't been able to get myself into like super hard workouts again. I'm like, edging back into it after the holiday, dipping back into it after the holiday. So maybe not sleeping as well and other things like that. Plus, you know what? Another thing that... So remember, there's this whole thing that I clear my throat too often. I have allergies, and I think that the allergies are causing me to like have stuff in the back of my throat. And so I'm clearing my throat too often, and I'm trying to get myself to like drink water instead of clearing my throat. So I went in search of home remedies and looked for some tea, and so I looked for ginger. That was okay, but didn't really make a difference. After you're done drinking it, no difference. While you're drinking it, sure. After you're done. But then another one that I saw was that stinging nettle. You can make tea out of stinging nettle, and it has anti-inflammatory effects. That it actually is kind of like an antihistamine. Do you eat a lot of dairy? No, don't. It's like an antihistamine, and so I did that, and when I smelled it, I was like, I don't know if I should actually drink this, because it basically smelled like somebody went out into their garden, pulled a bunch of weeds, dried it out, crushed it up, and put it in the tea packet. That's what it. No, that's what it smelled like. That's what it tasted like. And I'm allergic to a lot of stuff. Okay. I'm allergic to a lot of weeds and grass and all of that sort of stuff. So I was like, I don't know if I should do this. Maybe I'm allergic, but if it's heated up and it's tea and all that sort of stuff, maybe it doesn't matter. So I'm drinking it, and like I can feel like the back of my throat feels kind of like pepperminty, and I even kind of felt like some inflammation in my throat. And when it hit my stomach didn't like it, although it wasn't too bad. So yeah, I think I was allergic to it. I don't think I'll be doing that again. And I think that my system ever since then has been slowly pushing it out. So we got the dollar to come back here, and the treasuries are recovering. Eat a liter of full-fat organic cow milk every day. I have been drinking some hot cocoa. That might contribute, but generally speaking, I don't eat a whole lot of dairy, no. I really think it's the allergies. Like, I can't... actually, maybe I can... Do I have it? Where is it? Oh my gosh. I have it on my phone here, but where is... Here it is. love this song. There we go. I don't think I'm actually allergic to milk, though. You find a cow emoji. I wish that YouTube had better emoji functionality like Twitch does. I mean, like you can totally you can make your own custom emojis and stuff, but like people don't use them. Okay. So like here is my my allergies thing. So like look at this. So like a 6. Anything 5 or above. Okay, well sorry, I don't have the screen shown. And anything that's a 5 or above is like a severe allergy. So like, look, I'm severely allergic to pigweed, Bermuda, fescue, cotton, DF mite, cottonwood. Sorry, not cotton, but cottonwood. Cats, dogs, aspen tree, box elder, cedar, elm, juniper, mesquite, mulberry, very much oak. So we're getting the remarks from Bostic. I guess it was prepared remarks. Market's not really reacting. Okay, Feds Bostic does not discuss current policy views. Okay. So that's a nothing burger. Anyways, alfalfa is really high. Right, I'm allergic to freaking everything, dude. Like basically, if it's in the air, I'm allergic to it. Oh, right. So Edge Clear is the introducing broker. The FCM for Edge Clear is Phillips. I guess Bostic does say inflation is the biggest headwind to the U.S. economy. Doesn't seem to be reacting to it too strongly. You can be careful about the dollar here still. Dollar's kind of going sideways, if not turning down. Yeah, so you're like, I'll lease ZN and buy back your CTA with my ZN money? And I'm sitting here like, well, be careful. Regulators will notice those things. Did you hear, by the way, I was seeing this morning, that the FBI is investigating / charging a guy that manipulated a decentralized finance market. So basically he came in and he bought up that DeFi market big time. And then because that DeFi market was up, he was able to move into a more valuable asset at a better price, and then dump the DeFi market. So he basically used his market impact to manipulate a market and get a better price, right? And the FBI is charging him because of that. I mean, now you can use your market impact in illegal ways. I mean, generally speaking, you move the market and that's just trading, right? But like there are certain things that are considered kind of like coercive, like an ignition event, for instance, or spoofing, that they can go after you. And so it's really interesting to me that the FBI is going after a guy on that. Regulators aren't doing anything about it, but the FBI is. That's interesting. Do you have an opinion on the YouTube channel Fractal Flow? Never heard of it, but the fact that it has the word fractal in it means that it's probably bullshit. So I gotta warn you, you're the first time here. I am extremist anti-technical analysis. Why am I extremist anti-technical analysis? Like, here's the thing, guys. I wish the technical analysis worked. I really do. Not to toot my own horn, but I'm really good at that shit, right? If technical analysis was the way that the markets really worked, I'd be the greatest trader of all time, okay? I'd be making so much effing money from trading and everything if technical analysis actually worked. It just doesn't. And I have the skills to do the data science and backtest these sorts of things and like automate strategies and create things that are, you know, advanced. I'm a very good programmer. So a lot of things that people are like, oh, I don't, you know, how do you program? I don't know how to program that, or, you know, to test it. And I can find ways to do that sort of stuff, right? But everything that I test suggests that technical analysis is just not an effective way to trade. And Fibonacci levels in particular are complete nonsense. So there actually are kind of like levels. So there is a square root law to meta order impact, which is to say, if you were to come in and buy like 60,000 contracts here in the ZN, it'll move ZN up a certain amount, right? And then you come in and you say, well, what if I bought 120,000 contracts, right? Will that move it twice as much because it's twice as many contracts? And the reality is it's not. It would only move it half as much because it's a square root law, right? And then so there's that. And then once the meta order ends, there tends to be a post meta order regime change pullback that follows the 3/4 law. So you can kind of calculate based on how far the move was, if the meta order dies out, and assuming that it was driven by a meta order, how far it's going to come back. But those numbers don't line up with Fibonacci numbers at all. What about price action? Complete nonsense. I have a whole video making fun of price action. So understand. I'll do it here though, because I'm on a wrap and I don't know. I'm always super nervous about talking. Not nervous, but people don't like to hear it. You know, someone was like, "Oh, I'm gonna chase people away, telling them the truth," but this is just the truth. Okay, price action is just a marketing word. So price action is a way for people to sell technical analysis, quote unquote, without calling it technical analysis. Now, they do have one thing, which is they say you shouldn't use lagging indicators, right? Like moving averages and MACD and RSI, because these are all lagging indicators. That's true. There are some ways, there are some things that you can kind of do to reduce the lag and quantization effects that will hurt you with those kinds of lagging indicators. But even after you do all of that, you break even. Okay. But that's not the key problem. The key problem is that the past data doesn't predict the future data very well at all. So the price action people will say, well, it has to be based on the current price doing something. So like there was a support and resistance level there before, and now it's going through that support. And wow, there's somebody selling that so hard all of a sudden. 3,705 at 24. Dude, that's so we are in the time when I would see this too. Probably too late. Okay, but anyways, you know, so a lot of price action, what they're actually talking about with price action are like doji, candlestick patterns, support and resistance, etc., etc., etc. Right? It's nonsense. It has no predictive value whatsoever. And they use the term price action because they can market better with it. Because who's going to say, oh yeah, the movement of the price doesn't matter, except for Seth. Seth's the only one that's going to come in and tell you that. But everybody's going to like, oh, well, of course the movement of the price matters, because when the price moves, I care. So certainly it must matter, right? Right? Volume profile. Now, volume profile is kind of interesting because if everything was completely random, then when you look at the volume profile, it would just be completely disorganized, right? But we tend to find that we see distributions in volume profile. Okay, so there is something about the market that creates those, and it has to do with what we were talking about with the square root law and how liquidity gets damaged, and so it has to range in a certain area and that sort of a thing, right? But the issue there again is that what's going to move the market is the future orders, and the future orders can come out of nowhere, right? They can be based on news. It could be that they were planning on buying it all day based on just that they had to rebalance their portfolio, and there's nothing in the chart that's going to tell you that that's going to happen. So here again, a volume profile as a way of predicting what the markets are going to do, it's not effective. So what you have to do if you want to predict the market is you have to predict the orders, and you have to find something that is a predictor of order flows, right? So if you have a predictor of order flows plus current conditions, then you can predict what's going to happen, right? So what would be something that is like a predictor of order flow? Well, breaking news, for instance, changing expectations about future fundamentals and flows, that will cause people to submit orders. That's a very effective predictor of order flow. Okay. Portfolio rebalancing, that's a very effective predictor of future order flows. Options positioning is one that's really been moving the market, although I've been finding it very difficult to sort out lately because the 0 days to expiration options have really been changing that market, right? So all of those things. So, you know, that doesn't mean that volume profile is useless, because volume profile is kind of telling you something about the market, right? I think that you can see and understand those things about the market much more effectively from watching it live on the DOM than you can from looking at the volume profile and everything. Okay. And more to the point, all of these things about like, we're going to move to the previous day's point of control or to the previous day's high and low and all that sort of stuff that they talk, it's nonsense. It's nonsense. Like, you might have something like, we're very likely to touch the previous day's point of control. Well, why is that? Because volatility clusters. So the amount of range and volatility that we had yesterday is likely to be the same amount of range and volatility that we had today. But if we don't touch the previous day's point of control, it probably means that you're getting a meta order moving price far away from where it was before. And if you try and take this trade on it, reverting back to the previous day's one, you're going to get slaughtered. right? So that is, if I program that up as like a trade, the risk reward, it doesn't work. Use volume profile since the footprint. I think that anybody that's trading, especially in the futures markets, can benefit from the DOM. So I'll give you an example of something that I can only see from the DOM. Okay, so like I said, you're going to run into an area where the market maker doesn't want to put liquidity up. I'm not necessarily seeing it right now. This market is probably not the best market to try and use as an example, because this market is a little bit disorganized this morning. The news is kind of taking us beyond this point that I'm talking about, and is just leading to chaos. And the liquidity is still really weak in the treasuries as well. But what you're going to see is the inside bid and offer, they don't want to put liquidity on it. It'll be like if the 22.5 was the middle here, instead of it being 528, let's say that it was like 200. Okay, there's like 4. Okay, does it stack back up now that they've traded? It does. It stacks back up. Okay, but you'll see these situations where like they just can't get the bid to stack at all, and so they'll sell it, and then nobody's willing to stack on the offer as well. There's only like less than 100 on the offer, and they'll go back and forth across that many times. Another thing that you might see is you might see a large transaction. You might see a large iceberg like 3,000 trade here in the treasury, and then it starts to do that. Okay, so when you see those sorts of things, especially after a big move, that tends to create the liquidity hole. So you can identify the liquidity hole like before it really forms. And what will happen is that price will become the new point of control. So this kind of distribution that you guys on volume profile are looking for, right? What I'm doing is I'm trying to predict where that point of control is going to be before it ever shows up on the volume profile, is essentially what I'm trying to do. And the only way that I'm able to do that is by watching the DOM and looking at the liquidity and seeing how the liquidity reacts to the market orders that are coming through. So is it that the market orders coming through decrease the amount of orders that the market makers are willing to put out at any given time? So it's like they'll kind of piece it out little bit by little bit. They're only willing to put like 50 orders out at a time. Overall, they might end up trading more volume at that price than anywhere else, but it's just how much they're willing to put out at any one time. And if they do trade it, how does it react? Do they stack more on it, or do they just let it tick down? And then nobody wants to put it on the offer as well, right? Do you recommend that? So I have not worked with ATAS as much. I do believe I've loaded it up on a demo. I think that most of these platforms that have a DOM and volume profile tools would be acceptable. They absolutely would be totally acceptable. But my favorite is Jigsaw. I'm also, in full disclosure, I'm a Jigsaw affiliate, and I have an affiliate link in the video description. So if you decide to get Jigsaw, you use my affiliate link, you get a small discount. I don't know how much it is now. I think it's like $30, and then the channel gets a commission. And we use that to make the channel better, which is why we have such a nice channel. And I also use NinjaTrader 8. I have a indicator package for NinjaTrader 8 that gives you like this synthetic dollar index and these spreads. Actually, we should take a look at that. Yeah. So when we're looking at these spreads, since the news we were flattening, but then this little move down that we had, oh man. So you see the cumulative deltas, that second data series in the 30-year in particular, they really sold it, but they were selling it in that's the 10-year. It was really all three of them, the 30, the 10, and the 5. There was just some really strong selling there. But you can see how, because of the square root law, we didn't move as much, right? So the liquidity is kind of strained here. but they are able to execute a lot of volume in there because of it as well. But the spread, we are flattening. And then if we come back over to here, we look at the dollar, you can see that the dollar has just been on a tear. Now, the dollar has had some pullbacks, and that's why part of why I think that it's getting a little bit more difficult over here in the 10-year to trade. But both my dollar index and those spread indicators are in my indicator package at speculators.com. How long do you usually stream? I stream until 11 o'clock Eastern time. So we got a whole hour and a half. Got a whole 90 minutes to talk about whatever we want if you have questions. Okay, so Andre speaking as Future Trader 71, his analysis seems pretty solid so far. So I think that to a large extent, Future Trader 71 understands some of the things that I'm talking about. So I think that he's still an expert in auction theory, and some of the empirical information that we have about market microstructure and some of those stylized behaviors of markets that I just told you about don't jive with auction theory, right? Because auction theory, a lot of auction theory people will tell you, well, a lot of volume trading at a certain price means that there's an agreement on price. So we're going to range where there's agreement on price, and then somebody's going to try and move it out from there. That's not true. The reason that a lot of volume ends up trading there, a lot of it just has to do with chance. It's just that a lot traded there very quickly and created the liquidity hole, and that's why it stayed there. And then that ends up becoming the point of control. So it's not, doesn't tell you anything fundamentally about it at all, right? But I don't hear him say those things so much. So, and I also, if you go and you watch his videos, he kind of, explains that, well, you can do all of these stats and everything, but at the end of the day, like that can always change and stuff. And so really your edge has to come from the risk management side, right? And not only that, but he does follow the news. He talks about news and these sorts of things. So you can look at some of the technical analysis sort of stuff as kind of a way of trying to get yourself to trade consistently. In other words, you might be able to use technical analysis and it provides absolutely no edge whatsoever other than the comfort that it comes from that you're following as a technical strategy. And I think that FT understands that to some extent, right? And that a lot of the risk, a lot of the profits that can be generated from those kinds of strategies comes from the taking on of the risk, right? How can one predict that a very big guy is going to take a dump? It's very hard. So I can't do it all the time. So I think on the first day of the year, there was like this pretty aggressive move down in the treasuries that I think may have been some hedging for corporate bond offerings and so forth. So that would be like a big guy taking a dump that, we would want to be able to predict, but I did not have the information to be able to predict that, right? But sometimes we have these situations where, especially because of news and economic numbers and so forth, or because of like really big imbalances going into options expiration and end of month and stuff, you can predict what they're going to do. And you can kind of come in here early and say, yeah, they're going to sell this, and just go with it. Right? I thought you will say you would see him going to the bathroom. What you need to do is you need to look at the last time that he went to the bathroom and see how long it's been. And he might have a certain time of day that he likes to do it. Where did you learn? Well, so I got introduced to the DOM from No BS Day Trading. I still absolutely love. Just realize that the stuff that they're teaching you in no BS day trading is like kind of high frequency trading stuff, and you're going to have to understand the context and have predictors of order flow to be successful. But it tells you the game that's going on, and I find it really useful, and it's only like what, $90. So that's where I started. The stuff that I know about, like the empirical, like the quant stuff about how liquidity works, I largely learned that from a book called Trades, Quotes and Prices, Financial Markets Under the Microscope by Jean-Philippe Bouchot, and a bunch of other guys. So that is probably the best book that you can get on, like, you know, market microstructure, let's say. And then from there, you read lots of studies, right? Like I go to archive.org every month at least, and, you know, do that sort of a thing. So once you've read that book, then reading those studies, you kind of understand the context that those studies are coming in, and so you can actually understand what they're saying. So you do that for years and years, and you learn a lot from that. And that book is not specifically about the DOM per se, but it's about the order flow and how the market microstructure affects the order flow. So basically what I'm doing here on this channel is I'm taking this information that we've learned from these studies, and I'm packaging it in a way that is applicable and makes sense to you as a retail trader, which nobody else has done. But that's the value add that I'm giving you, right, with the education on this channel. But really, everything that you need to get started is here on this channel. Just go to the main channel page, and I create videos. We've done pretty okay. I'm kind of getting to the point where it's like the big videos that I wanted to make, I've made. So we are going to get a number here. Just flip a coin and do what your gut says, and then blame the coin flip for that decision. Yeah. I got to tell you, the difficult thing with the way that we trade is there's definitely edge in it, but it's very hard to maintain that edge. You have to be really informed. You have to really know what's going on in the market and constantly doing your research and stuff, right? So that edge is difficult to maintain. It's not something that I'd recommend unless you're just really interested in financial markets and what's going on. Well, I can't say anything about S&B. I don't know much about them. Okay, so the PMI is 44.7 versus 44.4. Has a wee bit of selling, a wee bit there in the treasuries. It looks like that was mostly like low liquidity. There was some absorption at 20. See if the selling flow continues. It looks like the flow right now is very much market sell right now. So I can't really say anything about SMB because I don't know them or if they're actually making money, but you know, right there, you're already kind of saying like they're combining all of these different things. How do we know that their technical analysis stuff really has anything to do with it, right? They're using the news. Maybe all of the profits actually came from the news, and maybe they'd do better if all they focused on was the news, right? There's no way for us to really know. So now we are kind of getting some signs of liquidity problems, right? So they just took an offer there. They're kind of scared to put offer. They're kind of scared to put a bid. A lot did trade there at 20. So if we're in a trade, that's not what I would like to see in a trade. We're in a situation where I think we could still get some market selling, but I'm a little bit on edge now because of that. Okay, so they were willing to take 19.5. Nobody putting up a fight at 19. Are we seeing the Japanese yen moving with it? No, not yet. So the quarterly, it is just a treasury. It is flattening, so the 30-year is lagging a little bit. Yeah, I thought so. So you just thinking about that trade that I took, and I don't know, I was a little sneaky about it because I put a limit order out there and then kind of kept talking, but it had nothing to do with any kind of price action, crossing a certain threshold, some strange order flow pattern that I was seeing. None of that. Why did I sell? Because all of the flow this morning is selling because of this positive jobs news that we had. And then on top of that, we just had the S&P services PMI, which was a little bit above expectation. That doesn't help, right? So I come in, I take $12, $15, small one. They might be, so sometimes I get out a little too early. Sometimes what you'll see is they'll try and slam it down a little bit further and then it comes back up. But I got out based on what I was seeing in the liquidity, right? I got out seeing that even though they were selling quite a bit, the liquidity was such that they couldn't really move from there. So it made sense for me to just take the quick profit. And look, if I hadn't have taken that, I'd already be losing like half of my profits from it, right? So that was just reading the liquidity conditions. So again, current conditions plus predictors of order flow, then you can predict price very effectively, right? But you have to have predictors of order flow. And what are predictors of order flow? They usually have absolutely nothing to do with the data that you're getting from the exchange. You want to go and find a data source from outside, something you read on Twitter, something that you read in an analyst report that tells you things about positionings and options and that sort of thing, right? But really what we want to do is predict the orders, because the thing is if I come in and I say, okay, I want to know, is the ADP jobs number, what is the impact of the ADP jobs number, right? So if I come in and I say, okay, every time that there was an ADP jobs number and this is how much it missed by or whatever, and this is how much price moved, right? That's not going to give me that's not going to give me good data, because the conditions under which that happened are going to be different every time, right? There might be more or less liquidity at a certain time, and if there's less liquidity, then it's going to move more, right? All of those sorts of things. It depends on like what the volatility was around that time and stuff like that. But if I just come in and I look at orders, here was the miss. Here's how many orders came in. Like, what was the net change in cumulative delta? That tends to be consistent, right? So I can predict the orders. Now I have the thing. This is a predictor of order flow, right? Now I can combine it with those variable current market conditions and the stylized behavior of markets that we know to make a very accurate prediction of where it's going to go and how to best position myself, right? Makes sense? That's how I trade. And it's based on proven studies and empirical data. It's not, I read in a book, people say that gaps tend to close, this, you know, proven data. Well, I think that Nasdaq Killer is still in school. Are you planning on staying in Morocco the rest of your life, Nasdaq Killer, or are you gonna like once you're done with school maybe move? I do kind of think that if you wanted to trade, if trading was your thing, that it would make sense to move, but move to Dubai. There you go. That's actually not a bad idea at all. That's your dream. I'm all for it. You know what? So I think it was 2000, or sorry, it was 2000. Yes, it was. So my father used to work for NCR National Cash Register, and their business guys, if you met the quota, you'd go on a free trip. And in 2000, they went to Dubai. And it just looked like the coolest trip to me. I mean, I was a kid at the time. I was like 14 or 15, right? But it sounded so cool. A 7-star hotel, what? All of these crazy things, right? And also the culture, like the Muslim culture and everything, that was really super interesting to me too. I guess I just kind of like anything that's different, but you know, different to what I'm familiar with. But it looks so cool. And nowadays, like for instance, I follow Nassim Taleb. I think Nassim Taleb is a really smart guy. He's a little bit overly aggressive sometimes. I don't think that he understands the limits of his political analysis, but when it comes to statistics and like proving things and stuff, he is almost always dead on. But he is just like, oh, don't ever go to Dubai, don't ever go to these countries. Like, I understand why he says it. I don't know if right now would be the best time for you know, an American to go on a trip to Dubai or to live in Dubai, but someday I would like to go visit. It just looks like a cool place. Someday I'd like to go visit everywhere. Okay, so I have a news squawk that I use called Financial Juice. So it's also something, all of the things that I use and I find really useful, I went out and I got affiliate links or whatever for, right? Like these with Financial Juice, that was like from day one. Like they made the affiliate program. Well, probably they didn't make it for me, but like I was like one of their first affiliates, if not their first affiliate, right? So there's a link in the video description if you sign up. It helps the channel. But it's a news squawk. I wouldn't say that it's the best news squawk. Like I do think what do they call them now? I guess they just call them news squawk. Newsquack.com. It used to be Rand Squawk. They have a really good squawk, but it's super expensive. Okay, but Financial Juice is the least expensive news squawk that you can get, and it definitely gets the job done. I can, especially on the economic numbers, it's so important to have a news squawk so that I can hear the number and see what it was. Because if you have to sit and wait and click refresh on Forex Factory and stuff, it's too late. So yeah, I really like Financial Juice. That's what I use for that. And then I have TweetDeck up. So a lot of the stuff, when you hear me reading things, I'm watching TweetDeck. And you know, I have all these traders and stuff I follow. I have a video about trading the news where I link to some of this stuff, like my list of news squawks that you can follow on Twitter, for instance, right? And then I also read a lot of Zero Hedge. Now I understand Zero Hedge has problems. There's like some political bias there, and like frankly some like foreign propaganda there. Like they are totally sharing like Russian propaganda a lot. Okay, but the other thing they do is they have analyst reports. Like they will share information about major analyst reports that will give you predictors of order flow and are really useful. So I read them a lot. I have been given charge of the baby. Hello, baby. gonna say something? Or am I just gonna have to put the microphone away? You want to set up a 0% tax. You definitely want to incorporate. So I guess it doesn't matter, because when I set up when I set up my investment advising company, and I'm not going to do like an S corp or a C corp or anything. I think that I can just set up an LLC, right? I think that it will be an LLC, but that's going to be an interesting journey, guys. Yeah, there you go. I'm gonna teach him right. Hopefully they have an interest in it. I wonder. I'm telling you guys, the brother, I have a 3-year-old. He doesn't speak yet. He's autistic of some form. I'm telling you, he's just not. This one doesn't have it. Okay, this one is already showing things to me that the other didn't. Like, for instance, we have a little baby jumper. And the baby jumper has like these little pillars that have like animals hanging from them, so that the baby can try and grab the animals. And he'll try and grab the animals. I tried to convince Asher to try and grab the animals, and he was never interested in it. So they're different, right? That kid is either going to be like non-functional, has to live with us for the rest of his life and can't even talk, sort of a thing, or he's like the next Michael Burry. I'm not even kidding. Like, he's autistic, man. And yeah, if he has the interest in it, I'm going to teach them this stuff. They'll understand these things before they get even into college. Yeah, they're going to have a big leg up. And they'll be able to trade at a bank. Make the big bucks. Or heck, who knows? Maybe by then I'll have a big investment company going on and they just help me with the investment advising. Well, we're back to 3.77. So when somebody's new in and I take a trade, I always want to be able to take a trade that kind of shows people the power of what we're talking here. I feel like, I didn't make a huge profit on that one, but I think that we did a really good job of showing how you can use market microstructure to your advantage in a trade. In this instance, knowing that it was time to get out, right? You were lucky my brother craves boys, but he only gets girls. Oh, that's funny. I thought that when we were gonna have a second one that we would get a girl, but no, 2 boys. But you know what? Like, in the end, I think having 2 boys close to each other is cool. I mean, like, 2 girls close to each other is cool too, but it's not nearly as cool as 2 boys close to each other. Because girls kind of, I tell you what, but women's social interactions are all about, like, what is it that they say that, like, when men get together they insult each other, but they actually love each other, right? And when women get together they say nice things about each other, but they actually hate each other. I kind of feel like the girls are like, the girls, they fight a lot, but you get 2 boys together and they're really close, that can be a very powerful thing. Especially if I'm telling you, 2 boys close in age, both with an interest in markets and a father that understands markets and can teach them stuff. Those are potential billionaires right there, man. Not, maybe I'm having delusions of grandeur, but maybe they don't choose to go down those paths, but they could do some cool things. So I think in the end, I'm glad that I had 2 boys. But I still worry a lot. I probably shouldn't be. I don't know what the chances. Like, it's so hard because it's like, well, I know that there's some developmental issue there. I don't know how severe it is. There's no way to know. We just have to wait it out and see how he turns out. It's 22.5. So there's now I would be in adverse excursion. Why do you like to eat quartz so much, baby? He doesn't know, but he thinks it's fun. The microphone's kind of in the way. Like, no, Dad, keep it right there so we can talk. And why do you think every bigwig is incorporated in Delaware? Okay. Oh, now that is interesting. Can you, as a Moroccan resident, go and form a company? You could. I think you definitely could. You might have to pay somebody a lot to do certain things for you, though. Right? Do you know if the wash sales rule can have any impact on the market, especially for big ins? Well, so I think that the wash sales. So here's where the wash sale rule comes into play. I think the most. And when you say wash sales rule, I think we're talking specifically that in order for losses to count on your taxes, you have to take the loss before the end of the year, and you can't rebuy that asset or a substitute asset for at least a month, I think it is, right? So there was a lot of selling in December that I was very surprised by the amount of selling that we got. Like, we predicted the first half of the month really well, and that was as far as I was willing to go. Like, I was saying, I think we're going to see positive flows in December. I was only thinking about the first half of December because that's what I was going to trade. What are you trying to get? You want the bottle? No? Here. Have this. No, not that. No, you're going to put your mouth on that. I don't want you. Take that. Anyways, so I think that a lot of the selling in the second half of December was absolutely tax loss harvesting. Yeah. Now, unfortunately, on that one, we don't really have a whole lot of data to go by to be able to predict how much it would be, right? Should have seen that one coming. Okay, so what's Carl Quintilla putting here? Pantheon Macro, 3 of the previous 4 ADP readings have undershot the official private jobs number. It does make us more comfortable in our forecast of an above consensus payroll print tomorrow. We are nudging up our estimate to 275K from 250, and the consensus is 200. Yeah. You want to be on the floor, maybe? Excuse me. Yeah, he wanted to go down on the floor and explore, for sure. Although I would feel more comfortable if you were on... No, actually, there's boards over there. I don't want to miss some of those. Well, now I'm seeing an interesting thing in the treasuries here is that the treasuries have pulled back considerably, but I'm not seeing like the currencies do that. That was fast. That dog. Well, let's get myself situated here again. Well, it's not so NASDAQ killer. It's not that Delaware pays 0% tax per se. It's that like all of the rules around forming businesses and so forth are just like way more lax there. I mean, it's like if you go and you buy treasuries and you make a profit on them, you're still going to have to pay the federal tax on it. Whoa. I'm hearing something on the news squawk about a truce in Ukraine. Truce in Ukraine from January 6th to January 7th. So I think it's only a temporary thing. I think it's only a 2-day thing. But the markets are moving on this. The treasury is not too much. Again, Kremlin announcing that Russia to announce a truce in Ukraine for 1 day between January 6th and 7th. So tomorrow. Gonna go have cake. Thanks for coming by, actually. Hey guys, don't miss tomorrow. Tomorrow's gonna be particularly interesting. I got a surprise for you that's gonna make tomorrow's stream particularly fun. Because of Russian Christmas? Okay, gotcha. It sounds to me like a headline that shouldn't really impact us, but we are seeing flows off of it, right? Just like I was saying, this is the whole weird thing is like we were talking about situations where you could have fundamentals that matter, but the markets move a different way, right? Now we have a situation where you have fundamentals that don't matter, and the market moves anyways. That happens a lot. Because all of the traders and the robots and everything here in the words truce and are putting flows out there. And the treasuries, the S&P 500 definitely rallied on that a little bit. It looks like they're already bringing it back down, but... Yeah, was there a lot of volume behind that? Oh yeah, there was. That 5-minute candle is massive. Yep, I think it was that Russia Ukraine news. Nothing burger, but well, for us here in the treasuries, if we expect more selling, I don't know. I think it's kind of hard. I don't know if we should expect a huge meta order in the next 50 minutes, and if we did, I don't think that it would get quite as far. But it gives you a good price, at least in the treasuries, to try and sell it again if we wanted. Yeah. So once again, the news was that because of Orthodox Christmas, there will be a temporary 1-day truce in Ukraine announced by Russia. And all of the news squawks were reporting it, and we saw volume come out because of it. But I would anticipate that everybody that got in on that realized that it was kind of a nothing burger. Although the S&P 500 was kind of on the upturn before that, I think that if they're able to get back above 3855 here, you know, after they consolidate, they're going to consolidate after that news and be like, okay, that wasn't anything, and take your profits. they get back up above 3855, that could be really interesting, right? Well, there was a little bit of selling. It looked like maybe the treasuries were already turning down, and look, they rebalanced back to 23.5 again. Looks like 23.5 is their favorite price. That again kind of puts me in a spot like maybe if I was at 376, we were there for a moment, I think. 376 wouldn't be at like a terrible price to try and take if I wanted to get like $10. But where we're at right here, I don't know if a trade really makes much sense, and the liquidity conditions and such are kind of difficult. I think that in order for us to really get a good trade, other than, you know, just luck of the draw and trying to catch a basis point, we would really need like some significant news to come through. Although I think that there still is a possibility that we could get, you know, some movers before the end of the hour. So let's just kind of stay on alert. I will put the safety on my account. Oh, that's interesting. India takes a step towards allowing leading foreign universities such as Yale, Oxford, and Stanford to set up campuses and award degrees as part of an overhaul of the South Asian nation's higher education. Oh, I tell you what, if the what's the word? I don't know. There are a lot of Indians come over to the United States for school, and if those people could get just as good of an education there in India, that would be a game changer for India, wouldn't it? Kind of interesting. I've actually been seeing a lot of those. It seems to me that the world economy is seeing some deglobalization, and some nations are really, really benefiting from it. No, I haven't had any problems with Rhythmic. What is it doing for you, Lucas? Haven't had any problems with it this morning, at least. You mean like you'll see the market orders and then the limit orders cancel like 2 seconds later? That is kind of weird if that's what you're seeing. That's like, have you tried like, oh, when it gets too volatile, it can't keep up? Well, so, oh, you know what, Lucas? So here's my recommendation to you is if you come into Rhythmic Trader Pro, are you doing it through Rhythmic Trader Pro? You come into window preferences, and then from there is performance tab, and I recommend having the adjust to keep up with market data inflow checkbox checked. So what I've found can happen if you don't have that checked is Rhythmic will send through more orders than your system, than the connection can really handle. And it's saying, well, I'm getting 3,000 updates over here, so I'm just going to push through all of the 3,000 updates over here. And so then these other ones get lagged or whatever. So if you tell it to limit it based on the performance, then what it seems to me like what it does is it limits the number of orders, the number of updates that you get, so that it can handle updating all of these things together. So the downside of it when it does that is that it will aggregate ticks, right? It'll be like, you know, if like there's 600 here and they all cancel, when the market is getting excited, you'll just see the 600 change at once, whereas in more regular conditions, you might see 50 updates come through with it, right? I'd also recommend here on Rhythmic having a quote board up, and the quote board you can put messages per second, so you can kind of see how crazy the market is, to kind of give you an idea of like, okay, when we get to this many messages per second, that's when I feel like I have issues. Okay, thoughts on delta indicator. So I think you're referring to like your order flow cumulative delta type of indicators, that is basically all market buys minus all market sells. And the market orders is basically the best technical indication that we have of informed trading, right? So I'm very interested in what direction the market orders are going, especially if there's like a strong autocorrelation. So we've found one of the strongest statistical aberrations that we've found in order flows is that there tends to be very strong autocorrelation in terms of whether the orders are buy or sell. And based on our modeling, our best guess as for why that happens is because of the presence of large meta orders that have to be executed over long periods of time, right? So if you come over here to my charts, now's a good time to kind of take inventory of things. I'll zoom in here. So you can see I have price. So like here's ZB, there's the price chart. And then I have delta, and then I have my spread. So you can see here what's actually happened. Well, it looks like that there has been a sell meta order. There has been a sell meta order across the board, but they finished after the 8 o'clock news or the 7:45 news. And since then, there has been some sort of a spread trade going on where they're selling the 5 and the 10 and they're buying the 30. And that's why you see cumulative delta rising in the 30-year, right? But our spread indicator down there at the very bottom, which is an indicator you can get from speculatorseth.com. You can go download the free 2-week trial of my NinjaTrader 8 hack. And it has that spread indicator in there. You can see a significant flattener being put on today. So I use tech cumulative delta. I also have it over here on my 5-minute chart in ES. So you can see it's a massive amount of buying that came in here, but although we didn't get a new high in price. And I think that was maybe because of impulsive traders, robots and so forth, moving based off of news that was kind of not a big deal. So we'll see if they can get above 38.50. That's kind of like a key options point. Cool. So yeah, cumulative delta are really useful. And again, like the thing that I would be looking for is like autocorrelation. So like if I'm not doing cumulative delta, if I'm just looking at the delta of the bar, I'm looking for a situation where, you know, like every bar there's a buy side imbalance. And it's like consistently bar after bar after bar, right? Because what is going to be the best for us to trade is if we can identify a meta order that we can ride the back of. So we want to see that auto-correlated order flow. And you'll note that what you'll often see is like cumulative delta will just be like very consistent line up or down, but price will be like all over the place. So the market makers adjust their bids and offers based on the flows that they're seeing coming in, making it easier for price to move in certain places so that they can still make money. So there again, this is why you want to look at the orders and not the price, because you don't completely understand what's going on if you're only looking at price. And you can see this with the DOM for sure. It's just it's a lot harder, I think, right? It's a lot harder to see something on the DOM that you're seeing slowly over the course of like 30 minutes, right? So that's where having some charts can be really useful. I wouldn't make decisions or make trades based purely off of the information that you're getting from the charts, but charts are still useful, right? Well, it's kind of interesting. Well, so the treasuries, they took that dive lower that we made a little bit of money on, but since that time, the S&P 500 has kind of been in mean reversion, and so has oil. Oil kind of going a little bit sideways. I think this is a good example actually here in oil. So look at oil. A lot of people would say this is a bear flag, that they're going to consolidate here and then they're going to break out lower and then we're going to move lower. This kind of a pattern, it doesn't really predict what's going to happen very well at all. Now, if I knew that there's somebody that has to sell a bunch of oil today, right, and it's a bunch and there's going to be like multiple legs to the order, then yeah, I'm going to see down, consolidate, down, consolidate, down. But unless I'm not going to, the presence of that pattern doesn't necessarily mean that that's what's happening. You know what I mean? It's like, if I have the predictor of order flow, then I can tell you what the chart is going to look like. But I can't tell you based on the chart that there is that flow in the market and that it's going to continue to do this thing, because the pattern can happen randomly. What are your favorite indies to make it easier to analyze the DOM? Well, so I have in my indicator package, I have a whole bunch of order flow toys. So what they do is they do some filtered analysis of the market depth that might be potentially useful if you're trying to make an algorithm. I created these for myself for my algos, and a lot of people really like those. I'm not using those indicators or the algos at the moment because probably later in the year I'm going to get deeper into the machine learning stuff, and I want to try and add Markov models on top of those to see what I get. And I'm collecting data right now. I've been collecting data for like 3 months, so I have a good amount of market data that I can test on. They will be more accurate than the backtester in NinjaTrader, because I'm recording all of the level 2. So there's that. With what I have right now, though, I just know like the most important things for my charts are synthetic dollar index, spreads on the treasuries, so those don't really have anything to do with order flow per se, right? Cumulative delta on basically every chart, that does have things to do with flow. And then correlated assets, right? So I really think that you will understand the order flow better if you watch the DOM and try and understand what's going on tick by tick, right? But you certainly can duplicate these things with charts. You can. And all of like NinjaTrader's order flow indicators, and you combine that with my indicators that are kind of more level 2 stuff, you could duplicate that information. And that, especially if you're doing a robot, that might be useful. But overall, I would really encourage people to but watch the DOM and understand the DOM. I really think that that's the best way to kind of get a hang of what's going on. So your brain, as you're watching it visually, your brain just kind of pieces together and kind of gets the pace of it in a way that we're not even conscious of. So you're training the neural network. You know, you take in the correct information, like what we know that is proven about the statistical behavior of an order book. So you put all of that, keep all of that stuff in mind, and then watch your order book and train the neural network, man. Oh, what's my started feature? Sure. I love how you put it in that, because it really is. I think most traders have some sort of story behind what it was that prompted them to do it, because it's just not a thing that you grow up thinking I'm going to be a trader, right? My kids might do that. My kids might grow up from the age of 5 saying I'm going to work at a bank and be a trader or an asset manager of some kind. But most people, they don't know about this thing until they get into school, which is kind of one of the crazy things, is that the people that have contributed the most to quantitative finance were people that, like, they studied physics and then came over, you know, it's that sort of thing. So what happened to me? So I was going to be a video game developer. I wanted to be a video game developer. I remember at school at the time, the big company was Zynga, who made Farmville. Farmville was popular at that time. And they came over, and like the requirements that they were looking for students and everything, it was like, you're recruiting people all across the country, and so we're competing with everybody all across the country, and you're only going to take like the best game developers that have like already made their own independent game on their own and this stuff. And then you're basically, they pay you minimum wage. Are you kidding me? This is so the company was very much utilizing their current popularity to screw over their workers. I was like, I'll go work there. Are you kidding me? And the more I started to dig into it, the more I started to realize that like the whole video game industry does that because people work in video games because they wanted to make video games because they thought it would be fun, that the companies kind of abuse you and take it, you know, have you work harder hours than you really should, and they don't pay you as much as they probably should, and so on and so forth. Meanwhile, on the television, everybody's getting mad at Lloyd Blankfein, saying that we're doing God's work and that they compensate their employees well, and everybody's complaining about the bonuses that they were getting over there, right? And I had gotten really into the market from the 2008 crisis. Like, I was big into politics, and I knew right away from the politics that it was a significant event, that it was like a life-changing event for our generation, the 2008 crisis, and that I needed to learn as much about the financial markets as I could. And so that was when I made the shift. That was when I said, you know what, this is stupid. The video game industry sucks, and the financial industry is awesome to work in. And I am a kind of person that can do this and understand both of the finance side of it and the technical quant side of it. And so I went into it. And so I just kind of on a whim applied to work at one of the big banks, and then forgot about it. And like 3 months later, they called me and interviewed me, and I got the job. So straight out of school, I went and worked for a bank. So that was what got me into markets. I worked at the bank for 6 years, because it started in 2010, did that until 2016. And since then, I've been working at a insurance exchange, health insurance exchange, which is a much less stressful job overall. And doing site reliability engineering, which is an interesting job, but it's a job that pays. And so when I left the bank, then I was able to start futures trading. At the bank, I did stuff like I had like a spreadsheet of trades and stuff. But after the bank, I started futures trading. And then there's the other story, which is I'd been working with John Bottomley for a while. Like, he had a chat room, and I was making indicators for him. So he let me in the chat room in exchange for me doing the programming work for him, which was good. He was kind of my mentor. He passed away last year. But we did that. So we were constantly doing that. And then there was a futures.io contest where if you were to do a video journal for a week, I think it was, or maybe it was the whole month, I don't remember, the most voted journal would get a NinjaTrader 8 license. And basically what happened, so I set the channel up and I started recording it every day. We couldn't stream back then. I just recorded it. And I was the only one that did it. So they canceled the contest. I didn't get the NinjaTrader license, which I'm still a little bit bitter about, but it's okay. I have a NinjaTrader license now from, being a ecosystem member. And but the thing is that a lot of people subscribed to the channel because I made the journal. Like, I think that we got like 200 or 300 subscribers just from that. And I found it really useful to talk through things, even though it wasn't like live and everything. So I just kept it as a live video journal, right? Then the Bitcoin futures happened. So the day that the Bitcoin futures came out, I was like, oh, I have enough subscribers to be able to live stream this. So I live streamed it. And the first live stream, we had like 16,000 viewers. Which is crazy to think about, because most days we get like 24 to 32 is like the max current viewers that we get at any time. So 16,000 was a lot. And then from there, I'd always been interested in making videos anyway. So then I started making videos explaining some of the stuff that I was in. So that's how I became a quote influencer. So it wasn't like I came out and I was like, oh man, I want to be a YouTube influencer and make $1 million on YouTube. Oh, you know what would be a really great space to be an influencer on YouTube? Finance, because finance is, you get good sponsors and advertising, high value advertising and all that sort of. It didn't start that way. It was a record of the trading, and it just kind of like kept getting out of control, or it became its own beast that I am now beholden to. Like, I don't think I could quit the channel if I tried. like I think so. Like, if the bank came back and was like, hey, we want you to come and work for us again, doing quant stuff, or heck, maybe even trading. I don't think they'd ask me to trade, but doing quant stuff, I think that you guys would all like gang up and somehow find a way to keep me here. I think that people would at least try. Today, the knob spread was under -3 Z-score. So are you talking about Z-score in terms of the Z-score is like what? The trend or the change in price? Like, you're saying just running the Z-score on the price? Wouldn't surprise me. Or are you talking about the change in price? If I was going to do a Z-score, I would probably run it on range. Or the range of the spread, like how much the spread changes in one day, sort of a thing. So you just Z-score on the price of the spread itself. It is, I mean, it's a significant movement. It was like half a point change in spread. So in the knob spread. And the thing that I find weird is that it was so prominently the knob spread. I mean, the other ones moved. I guess the 5 and 30 moved a lot too, but like what I see here, what it seems like is going on is like they're piling into the longer dated treasuries, huh? It's definitely like, I think today was a move that we kind of have to remember, like, because I think what's going to happen is tomorrow's non-farms and it's just going to be nuts. And the indications that we're getting are kind of suggesting at the moment that it's not going to be a good report, right? or rather that employment is going to be high and that the market's going to be really upset about it, right? So we're just going to remember that non-farms, but there was some significant moves today, wasn't there, on the ADP and everything else? You got to remember that. So the question is like, what's the next step of this story? Is what I've been thinking about lately. And I think that the next step of the story is we start doing investment advising too, and see where that goes. And I don't know if it's been like, it kind of scares me, to be honest, because everything else that I've done with markets just kind of keeps going out of control. You know, it's like, oh wow, I just kind of started a YouTube channel on a whim for a little contest, and how did it get to 9,000 viewers? Like, I know that that's small for a YouTube channel, but to me, 9,000 viewers is so many. And for the niche that we do, it's so many, right? So if the same sort of thing happens with investment advising, I mean, maybe it never goes anywhere, but if the same sort of thing happens with investment advising, like that could be crazy stuff. So that could be the next step. But I also am finding that the YouTube channel is doing really well. Actually, you should come over here and look at the stats again this morning. So that, like, the YouTube channel was doing well anyways. The stream is still always, it's always like the same numbers with the stream. Nothing ever changes with the stream. But like all of my videos are doing well and better for some reason. This is kind of weird. So this video that I put out definitely helps. Yeah. So let's go back over to here. Oops, that's not what I wanted. What is Z-score? So Z-score is basically a way of saying, so have you ever heard things like, when you look at standard deviation and like what is a 2 sigma change outside of deviation, right? So if you look at like what is the standard deviation and then you look at what's 3 times the standard deviation, and only like 1% to 5% of data points will fit within that range. That's basically what Z-score is trying to do. Is it's basically saying how unusual in the data series is this data point. So that's why I was saying that running Z-score on price, I think that I backtested that. I'd have to go check. Maybe I need to go do that one again, but I wouldn't expect Z-score on price because price is non-stationary. So you want to do it on something stationary. So like range, you know, if you do range of like a 30-minute candles or 1-day candles, and then you do the Z-score on that, that might be interesting. Yeah, it's like the occurrence of a certain condition. Yeah, it's basically like, so what he's saying is that it's a -3 Z-score. That means that like that almost never happens. That amount of change in the knob spread does not happen very often. So like if I come back over to this, so look at it like this. So the knob spread is that bottom data series, right? The amount that it moved in like 1 30-minute candle was pretty crazy. But that's what I can do. Let's I'm gonna duplicate this chart in a new window, and I'll try showing you what I think you would want to do. Bring it over here. So what we can do, this is kind of advanced funky stuff in NinjaTrader. So I think Lizard Indicators has a Z-score, right? That I probably have. There you go, Z-score. So there's Z-score. So we'll just do it on a 14-minute period. Okay. And then, well, let's apply that real quick. I think that that's going to put shading on. Well, that's okay. Okay, so there you're doing, it's doing it on price, right? So then what we can do is we can go back to the input series of this indicator and say, no, I actually don't want to do it on price. I want to do it on range. So I could say range percent. And then range percent will be running on close. Okay. So let's try that. Now a little bit better, right? Because now it's telling me, okay. So here are the moves that are actually significant. This is less spikes over, but it's a little bit different overall. See what I mean? Something that would be even more useful. Although I don't know if it'll. Well, we'll try it. Wait, does this have tick replay turned on? No, it doesn't. Okay, so what I'm going to do is I'm going to take the spread off. I'm going to take cams off. I'm just going to have the z-score. But instead of doing z-score, I'm going to do... or rather, instead of doing it on range, I'm going to do it on cumulative delta. Never. Okay. Okay. Now I shouldn't get any data points. Now if I come in here to the data series and I add the tick replay onto it, we'll see what we get. It's loading. Looks like the treasuries are kind of reverting back up a little bit again. It's calculating. It's calculating. Be patient, Seth. I was about to be like, oh, it finished the tick replay, but it didn't work. Okay, yeah, it did work. Ah. Now that's interesting. What's that spike right there? It's definitely pointing out interesting inflection points. But again, we just have to remember that past data isn't very good at predicting future data. You might be able to back test and do something with this and find something interesting with it. But there's always kind of like, could go away, you know what I mean? Or it could just be a statistical aberration that's temporary. But that's an example of z-score. Z-score, if you're trying to do like longer term analysis of the market and how the market tends to behave, like that's where z-score can be useful. I felt like there was another question I was talking. What were we talking about? Oh, we were talking about the YouTube channel thing and stuff. Oh yeah, how was the latest video doing? Not bad. It looks like it's slowed down in the past day though. Oh, that's not bad. It's well above trend and kind of slowed down. And if we get through on reach, it looks like people are click 5% is, I mean, if I could get a video to be 10%, then that could be like, then we could have like 100,000 viewer channel, but never gotten that. They are getting it from the browse page. only half of them were from impressions. And 5% of them are coming from people searching about Ninja Trader. That's really good. And content suggesting the videos. So that's all very, very good. And audience, are they... won't tell me that yet. Engagement. I was looking at the engagement yesterday. Yeah, it looks like it's above typical performance for engagement. But I was looking at the graphs. Yeah. So there was these spots where it was like, I gave a tip. And I was like, oh, okay. And then after the tip, like a lot of people left. So I think that maybe some people were like, oh, well, I already know that. I'm not interested in this video. And they leave. But I guess even getting above 50% halfway through the video is pretty good, right? So I keep wondering like, the YouTube channel is doing better than I expected at the moment. I'm not sure what the next thing I'm supposed to do is. Has Microsoft lost 7% the last 2 days? I think all of the techs are getting slammed right now, right? I don't think that now is the time, but I might snatch up some Microsoft stock in the next like 3 to 6 months, I think. We'll see. We'll see. Build a course. The course thing is so funny. We were talking about this yesterday. So one of the YouTubers that I've been following for like, you know, recommendations on how to make the best YouTube videos and that sort of a thing is Sunny Leonarduzzi. And she had some really good stuff about like building your YouTube channel at first. Although I do kind of feel like that she's kind of like the reason that she's successful is because she's a YouTube influencer and not because she had success on her own first and then became, you know, I see a lot of people like that. I hate that. But now her big kick is how to make courses. And her expertise is teaching people how to make courses and like offering them better and making more money off of them and everything, right? Meanwhile, over on TikTok, everybody is shitting on courses. Everybody is don't buy courses. They just want your money. They're not worth it. You know, everybody's turning away from courses. If you're an influencer, you probably don't want to do courses this year because people are turning away. I think it's so interesting. I don't know if that's actually all true or if that's like just the narrative. But my take has always kind of been that if I'm going to make content, why would I make it a course unless I was like gonna sit and like actively teach it regularly, right? Like if I was regularly doing webinars that you'd pay for, like a webinar series for a semester or something like that, then maybe that would make sense. Otherwise, I feel that the best way to provide the content for people is either A, through the YouTube videos, right, which we've already done, or B, a book. And I do have enough information to write a pretty hefty book at this point. Like I've seen these guys, they'll write a course or like a little book, and they'll choose like a huge font and super tiny margins and stuff like that. So like the one that I think is the best example of this is the PATS or max price action trading system, right? Like it seems like it's like 100 pages or something like that, but it's all big text and tiny pages. It's not actually that big of a document. I think that I think that I have something that I could write a book like this. I don't think that the first version would be like this. I think that the first version would maybe be a quarter of that. But I think that we could have a lot of information because first of all, we talk about market microstructure a lot, and that comes from this book. So that's everything that's in this book, taking it and applying it to retail traders can potentially be in there, right? So that's a lot in and of itself. But then the other stuff that I want to put in a book is like, okay, what is actually the ADP report? What actually is the non-farms report? How do they relate to each other, right? So the ADP report is basically ADP, a payment processor, coming in and saying how many new payrolls they've done. That's how that report is generated. So it's not everything, but so sometimes that diverges significantly from the non-farms, but it's kind of like a tea leaf, right? But the non-farms also has the household survey, which is where they call people's houses. So it's different, right? So there's like all of these nuances, and you can read about them in the reports. But one of the most useful things that I've done is gone through and learned about all of those stocks. So I've written a little bit of book stuff, and that's kind of the sort of stuff that I want to put in there, and other things that would be like predictors of order flow, right? Learning as much as you can about the markets so that you can identify those predictors of order flow yourself, right? So I think I could write a really big book, and maybe it would be an expensive book, but it would be a book and not a course, you know, because to me a course is like, I'm giving you a coursework and you're coming to me and asking questions about it, and I give you a grade, and it doesn't make sense. The course thing doesn't make sense. So I don't think I'd build a course. I'd write a book, sell the book. And I make services, right? So I have the indicators. These were all indicators that I wrote because I needed them to be able to trade, I thought, or I felt, or it is true. I mean, I can't trade without them, but you know, that's what originally created those indicators, and then we're doing it here on stream and everybody wanted them. So I said, well, okay, I'll make them available and we'll make a package that's worthwhile for people with an affordable price that everybody that has a NinjaTrader can benefit from having and can afford. So that's what we did. So we have the $100 indicator package, right? Book sounds good, not gonna lie. Yeah, I think it would be really valuable. In the meantime, without the book though, Sam, I have a lot of information from the VOD videos on here, and you just come and watch us. If you just come and watch the stream for a month and you watch through all of the major events that we get and everything, you're gonna learn a lot about how the market works and stuff, right? Especially you ask questions and stuff, and the thing that we found, of course, most day traders don't make it because they don't actually have they don't stick with it, you know. They weren't actually motivated enough to push through. It's because it's a very difficult thing to learn, right? But the number of people that we get here on this channel that actually stick around is much higher than most places. So we have, you know, like the dozen or so people here that watch the stream every day. It's like the same group of guys that have been doing this for 5 years now. So that's really impressive. Finding a dozen guys that have been doing it that long is hard, right? Because like only 10% of day traders make it that far. What do you think of Mac? First and only course I ever bought. Yeah, I took the book and I wasn't impressed with it, to be honest with you. I mean, I always get nervous about saying that sort of thing because, you know, I'm gonna like turn somebody off. But I thought that it was really what it was a collection of common platitudes that people say about the markets, like, you know, the trend is your friend except when it ends, and this sort of a thing, right? It was there was no empirical data in there whatsoever, right? There was no like, okay, here's what the market tends to do and here's how we know that, and that sort of a thing. And to be honest with you, I feel that what it is he tells you to take a really big stop compared to your take profit. So he's saying like, take 4 ticks and have an 8 tick stop, right? So most of the time theoretically you should win most of the time. But really what that ends up doing is you'll do well for a while and then you'll come to a more volatile market. You just get diced up, right? And I saw that a lot. So the reason that I ended up reading Mac was because in 2020, it was really popular. And then we had this huge influx of people. And I remember there was just like a dozen guys that came in either through Discord or YouTube that were like, oh, hey, I was trading Max, but now that the volatility is high, like the strategy isn't working and I'm just getting demolished. So somebody gave me the PDF to read. And yeah, I just really wasn't impressed with it. I was like, people pay money for this? Because it was an inflated book. Like the text was super big. There wasn't that much data. Like I think I read it in like 2 hours or something, and there just wasn't There wasn't any unique, valuable information that give you an edge over anything that anybody else was saying. You know, it's just stuff that kind of sounds good. That was my feeling on it. And again, there's no empirical data. So like, that's what you're always going to get from me is if I read something and they don't have some sort of like data about it, then I'm not going to care, right? Because there's so much information out there, right? This is what I think makes trading different from anything else. And I'll say this, if you have another question, should get it out now because I got to go in like 2 minutes. But I'll tell you this is the thing that makes trading so different from any other kind of endeavor that you can take on. And that is that you can come in and you can live and breathe the market and learn everything that you can about the market, study all day and learn as much as you can about the news and what's going on in this current day, and do that your whole life. And you will still not even understand even 1% of the information that is actually out there available to the entire market, right? There's just that much information that no one person can have it all. And no one person can even have a tiny fraction of it, right? And in a world like that, how do you sort out signal from noise? Because essentially what you're saying is there's this huge data set, and then there's this enormous data set of other information that's just information that is not even true, right? So your task in order to find this tiny subset of true information that is still really, really big is super, super hard. How do you do that? And the typical way that humans do this is like social proof, is they say, oh, okay, well, I'll go and I'll look at the guy that was successful, what he did, and then I'll follow what he was doing. Or I'll look at what is popular and I'll go and do what he's doing. But anything that becomes popular, the edge gets taken out of it because the market is competitive. So the nature of the game is such that you can't use social proof. So what can you do? There's only one thing that you can do. You have to do your own primary research. You go and you look at a report or a claim that they have, and then go and test it yourself and look at the empirical evidence. So if somebody makes a claim, and here's the thing, I'm constantly testing my own theories. Like I know a certain things about the market, and there's kind of these areas where I know like, oh, I don't know too much about that, or we don't know too much about that, so I'm going to investigate there, right? That's where I'm going to look. Why would I waste my time with something that some guy on the internet said? So like it's already been shared out there, so that doesn't help because other people might already be doing it, even if there is edge in it. But then he provides absolutely no information proving that there's actually anything to it. There's no empirical data to it. So if he can't make the empirical data to give to me, then why should I bother waste my time with it? And I think that that's the approach that everybody should take, is empirical data or get the fuck out. You know what I mean? So a lot of the stuff that I'm doing, I'm relying on other people's research. It's true. So that book, Trades, Quotes, and Prices, they got the data, man. Like at the end of every chapter, there's like, they reference 30 peer-reviewed studies almost every chapter. So there's so much data to read through and look at and prove things about the market, right? Real stuff, right? That's the way that you should approach it. But yep, arbitrary rules, that's what a lot of courses are. Hey, I got to get going. So thank you guys. I'm it was a lot of new people, and I always enjoy talking to new people. We had a lot of fun on the stream today. So let's go ADP. ADP scares markets. I'm scared about the job situation for sure and what's going to happen tomorrow. So don't miss it, because tomorrow's going to be crazy. In the meantime, stay excellent, team.